1-44, we're going to correct a balance sheet. So the bookkeeper of Lone Star Landscaping prepared the company's balance sheet while the accountant was ill. The balance sheet contains numerous errors. And here's the balance sheet. In particular, the bookkeeper knew that the balance sheet should balance, so he plugged in the owner's equity amount needed to achieve this balance. The owner's equity is incorrect, so all these numbers on the balance sheet are correct except for this capital amount. So we will have to figure out what the capital amount is at the end that will make the balance sheet balance. And so as we go through here, we're going to find out that the bookkeeper made some huge errors, such as including revenue on the balance sheet and including expenses on the balance sheet and including draws on the balance sheet. Those things do not belong on the balance sheet. So we're supposed to prepare a corrected balance sheet. And then it says, if a box is not used in the table, leave the box empty. Do not select a label or enter a 0. In other words, notice how many boxes they have here for assets. So if this company had only 2 assets, don't go ahead and fill in these other blanks. If they only have 2 assets, they'll only fill in 2 boxes. So before we can start creating this company's balance sheet, we have to review the balance sheet formula, which is pretty simple. Remember the 3 financial statements: income statement, statement of owner's equity, and then the balance sheet. So the balance sheet should only have assets on one side, and then on the other side they should have liabilities and then the ending capital. So notice revenues and expenses are over here on the income statement. They should not be on the balance sheet. And investments, also known as owner contributions, are only on the statement of owner's equity, and same thing with draws. So if we find revenues and expenses, investments, and draws on the balance sheet, then that's incorrect. So let's work on the balance sheet and let's work on the asset section. But I guess first we have to do the 3-line heading. So let's look at this 3-line heading. Did they do it right? The first line is always the name of the company. The second line is the name of the statement, which is correct. Now notice on the third line, the date-related line, they use the whole month. So that's wrong. A balance sheet can only show the balances as of a single day, because notice it's showing balances of cash, office supplies. So if someone asks us how much cash we have to say, well, what day are you talking about? So we have to change this to be November 30th. Now let's work on the assets. So we're just going to go through one at a time, one line at a time, and see which of these are assets. So cash, that is an asset. I'll put in the numbers later so we don't have this flipping around going on so much. Office supplies is an asset. Land is an asset. Salary is expense. That's an expense. It does not even belong on the balance sheet. That goes on the income statement. Office furniture, that's an asset because it has a future value. Notes payable, that's a liability. Expense, that's an expense. It does not go on the balance sheet. So do we have any other assets? Accounts receivable. That is an asset, because those are the amounts that the customers are going to pay us in the future. And looking through here, I don't see any other assets at all. So now I'm going to plug in the numbers. So cash, I'm going to copy, paste, office supplies, copy, paste. Of course, you do not have to copy, paste if you don't like to do that. Land, 3,300. You can just type in the numbers. Office furniture, 6,000. AR, 2,100. So now I need to add these up. So I've got 4,900 plus 300 plus 33,800 plus 6,000 plus 2,100 gives us $47,100 of total assets. Total assets. So now notice, see this line here? This line is saying we should add the numbers up above and put the total below. So we do not have another asset, so we're going to leave this row blank. So now let's go to liabilities. Starting from here, let's see if we have any payables. I see notes payable. I'll fill in the numbers later. Look for more payables. And we've got accounts payable. Any account with the word payable in it is a liability. So now I've got to fill in those numbers. So notes payable, 24,200. Accounts payable, 2,800. And do you see any other payables? I do not. So that's all the liabilities that the company has. So we'll leave this row blank. Notice there's this line here, horizontal line, so that means we need to do a mathematical operation. In this case, we're going to add those. So that looks like that's what, $27,000 of total liabilities. Now remember, the instructions up here say that the owner's equity is incorrect. So we cannot use this number. If we use that number, it would not balance. So if we took the, let's see here, if we took the 13,150 of capital and added it to 27,000, that gives us around 30,000 something, which does not equal the 47,100. So we're going to ignore that number because up here it says he just plugged that number in to make it balance. So what we're going to do, since it doesn't give us the correct capital amount, we do know that this 47,100 has to be the total over here. So this would be total liabilities and owner's equity. So now we can plug in this number. So 27,000 plus what equals the 47,100? Well, we got to do math. We're going to subtract those two. So I'm going to take the 47,100 and subtract this total liabilities. Minus 27,000 gives us 20,100. Now in a test situation, you should double check your work. Let's add this and double check to see if it adds up to 47,100. So 27,000, it does. Plus 20,100 equals 47,100. So total liabilities and owner's equity does equal the total assets. So the last thing I need to do is I need to label this. If I have a number here, I have to label it. So that is capital for the owner at the end of November 30th. And that's it. So don't forget to do the next version of the problem.